The majority of the meetings last year, as you can understand, a lot of interest in the DLT environment as well as regulation. One of the things I did do this year in April was to present to the SMPG, Securities Market Practice Group. That's at high level in terms of all the different national groups that are represented there. So they have this standardisation at a high level from a global basis down to a country level and even down to individual firm level. Interesting conversation there. They do start from settlement going forward, so that's one thing I think that we can, as an organisation, help them with that pre-settlement phase on how we actually automate the whole process there. The Oasis Open partnership is ongoing now, as well as the BSI, and Gary will talk about that later on when he gets his updates. We have 2 general meetings a year. This is the first one of 2017. We had the AGM, which I'll talk about in a moment, and it was the 25th anniversary of ISITC. So hopefully we can actually have a lot more time and effort in that area. And we'll actually be talking specifically about the AGM in a moment for next year. In terms of staff, we've actually got some different people on the organisation. Professor John Gavin at the front here. He replaces Dr. Herman Rapp, who unfortunately had to move away for personal reasons from the IEAF. And John will actually go through what he's actually planning for, which is quite exciting, actually, in terms of the academic forum that we've actually in place. Rob Scott. I saw Rob. Where's Rob? There. Rob Scott has joined the IELG. Rob's going to talk extensively about the new approach to marketing that we want to look at for this year as well. So there's some exciting stuff that we're actually doing. We've actually also put in place some sub-leaders as well. Now, being a voluntary organisation, it is a drain on resources to actually attend face-to-face meetings and everything else. So we wanted to make sure we got a quorum of activity for our executives. So we've actually put some sub-leaders in place. Membership, absolutely, it's not my key thing. My key thing is people like yourselves attending these meetings as well as the actual work group meetings. Membership fees pay for things that we actually do, but certainly from my perspective, I really want to have people attend the meetings. And as you all know, we actually are very open. We can actually welcome anybody from the whole field of life, so asset management, fintech, custody, brokerage, lawyers, regulators, etc., etc. So we're pretty open in terms of how we actually run the business. This is a big thank you to the 2017 membership that we've actually got. And you can see a whole broad range of different players that we've actually got in the marketplace. Some are global, some are domestic, some are technology, some are buy-side, sell-side. So very pleased about the fact that we've actually got that sponsorship for 2017. The AGM, I think, was a very successful event. We had Dr. Kay Swinburne open up the conference. The reviews that we had afterwards were very good, outstanding, best conference, etc., etc. But the most important thing is we actually got feedback on what we're actually doing, and the work groups are very much fully supported. I'm actually looking to see if there's anything else that we can actually do and attach to those work groups. And I've got a colleague in the audience who actually wants to talk to us about things like derivatives processing, right? So that's the whole range of things that we actually do cover. And certainly the AGM for me was a very important feature for us to get a benchmark. The actual AGM itself was actually underwritten by ISITC Europe itself, okay? So those membership fees that we actually had in place, they actually fund what we actually do day to day. The actual conference was free. Everyone that attended was free, and I believe it was a really good conference. We had over 120, 130 people actually physically attend, and we had 150, 160 people actually register. We always lose that 30, 40% on the registration to actually physical attendance on every conference. The cost of the event, as I said, was underwritten. We actually had sponsorship from Valente and from DTCC, which we're very grateful for their support. But this year, we're actually looking at how we can actually change the way in which we fund that going forward. We've got a finite number of amount of funds in our purse, if you like. Okay, we've got enough to, if we did this without any sponsorship, we've got enough to last probably 4 or 5 years. And I don't want to do that. I want to drain the resources totally. So what I've got is Rob Scott, he's going to be looking at how we actually go forward with the marketing of the AGM, how we do that, tie that into the digital marketing facilities that we actually have on the new website, and also expand that out to how we can actually help fintech firms, companies, etc., get their views out there through the website. The next date for the AGM is in 25th of January 2018. It's at the same location, okay? So we found that pretty central for everybody, and we're actually looking for help in terms of what are the topics that you actually want to have discussed at that forum, and who do you want to actually come and speak, okay? So Rob will be covering much more of that later on. The web presence we've actually got, I think, is actually phenomenal. It allows us to do much more than we had from our old clicky, clunky website for the last 10 years. We're also looking to how we can expand that out in terms of content and also context as well. So you can see at the back there's video cameras, and we're hoping to actually play that through our website so we can actually reach more people out there. Okay, and that's a partnership with CISI, which we'll talk about later on as well. In terms of governance model, you can see we've actually doubled up. We're still waiting for confirmation on the DLT, Gary. Have we got that yet? No? No, okay. So, unfortunately, us bankers have to go through a number of compliance checks before we're allowed to do anything in the public audience, and one of them is actually getting that one passed through. But you can see from the IEAF, that's the academic forum, so that's a link into the academia world, which John will talk about later on. And obviously, Tony and Chad on the regulation. Paul, have we got confirmation on secondary for you yet? No, we're still waiting for that one as well. Richard Young and Martin Sexton are in the audience. They're actually doubling up on the standard side of things. Martin's over there. The cybersecurity, we've had a very low start and sponsorship for cybersecurity. I think it's important, right? But what we can do at an industry level, not so sure. So we're looking for some leadership, some content, and some advice on how we do that. And obviously, from a membership, from a participant perspective, we actually have lots of people from operations, technology, and oversight, i.e., compliance, that actually run across all the different working groups. So they can actually be members of each different working group. And a lot of the time, we actually do it via phone and by a webcast as well. I want to introduce Keith Saxton. I've known Keith for many years. He used to be my boss, so I have to sort of be very kowtow to him. But Keith now is an independent director and advisor. He's also had a lot to do. He's a finance ambassador for chairman of the financial service program Tech UK. So I've known Keith for years. I know he knows the business. I know he knows technology. I know that's a great mix to have, right? So if I can ask Keith to come up.
So, fintech. Look, everybody sort of knows everything about fintech, right? So much written about it, so much press, so much focus from the government and everybody else in terms of making the UK, in particular, fintech capital of the planet. But there are some sort of nuances to all of this stuff. So what I'd like to try and do is take sort of two halves of a conversation, which will end up being a joined up conversation. One is to take you through some fintech trends. These are publicly available data points and slides. Bit of an eye test on some of them, I apologise for that, but they're all available through Innovate Finance's website. So first and foremost, I want to take you through some trends and my opinion on quite how we're developing here and what we're trying to do in fintech generally and how it impacts the industry. Secondly, there is a piece that we've just completed, which was a consultation, an industry consultation, around the creation of a so-called industry sandbox. And that ties up a lot of the momentum and general direction that we're travelling in currently, and talks a lot to how we can coordinate actually across the industry. And then obviously we'll sort of segue into sort of the robotics panel. But let me try and take you through some of this stuff. Before we get into today's world, I'd like to take you through two different perspectives, just going back 2 or 3 years, because in 2 or 3 years, that's a universe as time in fintech. So there's a couple of points, there are many others, but two I'm very familiar with, which I would point you to. So back in 2014, the UKTI did a consultation, which EY did a very good paper on, which was all about the landscaping the fintech market in the UK. So what I'm saying a lot this morning is about the UK. I don't mean it to be very UK-centric. It's just a good case study of fintech in general, but there'll be a lot of UK-centric comments. But typically, what we're trying to do, and I was partially involved in thinking through the scope of the paper, is that we didn't really know what it meant in those days. So what actually is fintech? And I think the really important point from this paper, to me in particular, somebody who's been around way too long, so many years in the industry, is that actually it includes traditional companies. So everybody would claim, if you spoke to any big tech company or software provider, they'll say, look, we're in fintech, right? I was in the markets years ago running trading rooms. We were big users of fintech in those days. We used to buy stuff. So fintech is not brand new. It's not all about, people running around in jeans, a lot younger than me, down in Old Street. It's actually got a basis in the industry. The other part is that makes up a big chunk of this so-called industry. 2 years ago, 3 years ago, we'd say the emerging side of that was probably around, they put a number on it, 18%. It's probably slightly larger than that. But in the key themes in those days were all about disintermediation. This is going to be the end of the world for the banks as we know it. It's going to be, everybody's going to be disintermediated. We're going to look at new infrastructures. We're going to monetize data and make so much new money out of all this data we've got. And obviously, even in those days, it raises the questions that are still very relevant. So we need to concentrate on all sorts of stuff that's going on around security, fraud, identification. Nigel mentioned cyber. Cyber basically trumps it all, in my view, which we'll get into. So if your infrastructure is not good enough for your own industry, it ain't good enough to protect yourself against cyber. So there's a lot of things going on that are going to sort of drive this through. Big growth areas in those days were perceived to be peer-to-peer, online payments, data analytics, still going on clearly. And the more meaningful comment is down at the bottom end. There is white space for disruption in middle and back office, and I suspect that is still where the money is. So we've travelled a long way. That's still to be done. Backing up that report, we rapidly moved into a paper that I had the pleasure to be on the expert panel for, which was sponsored by George Osborne, actually, all the way down through the Government Office for Science. So effectively, it's a paper by the Chief Science Officer for the government. This is a formal review called a Blackett review. There's been plenty over the years. We tried to write a paper on the future of fintech back in 2015, and it covered those particular areas: technology, work people, business models, globalization, and regtech. I produced the technology chapter with my co-conspirator Michael Lynch of Autonomy, and sort of we tried to take a stab at looking at where technology was and is going and the implications for fintech. The paper itself is very relevant still today, I think. Very particularly through technology, we looked at the emergence of what was then just forming as cognitive computing. We clearly looked at digital currencies, which was much more sort of blockchain than distributed ledger in those days. The same group did a follow-on paper on distributed ledger, so there was a good follow-up from that. And then, of course, there's all sorts of stuff around distributed systems. But one of the big chapters was on regtech, and like everything, everybody claims that that was where the name regtech was invented, but nevertheless, doesn't really matter. It called out the need for data-driven regulation, a whole new regulatory infrastructure, and all sorts of responses to what's been going on since 2008. This has been, if you talk to the guys in the Government Office of Science, this has been a very productive Blackett review. Most of the recommendations that were asked for in the paper actually came to fruition. Some of the sponsorship, we'll talk a little bit later about it actually in some of the other themes, is that the whole Project Innovate at the FCA were really mandated by this paper, which they grabbed with both hands. So the creation of the RegTech team in the FCA, the RegTech sandbox, all the sort of downstream stuff, a lot of promotion for bodies like Innovate Finance to take a lead in terms of promoting the city or UK as the fintech leader. So both those two perspectives have actually had quite a lot of meaningful impact. Now, where are we today? So what I want to take you through is VC trends, because typically VCs aren't everything, but it'll show you some nice trends in terms of what's on the agenda, what's been on the agenda, and I think you'll see an evolving theme here, which we'll sort of come to. So these data points are really from back end of last year. It covers 2016 predominantly. The update is really from January, February time, but it's sort of a good sort of synopsis of what's been going on. So the big picture headline is that, global investment continues to go up, but global deals investment are going down. UK investment's down, but UK deals are up. So that's sort of a sign of maturity to some extent, is there's more going on, not quite so much hot money actually chasing it around. Under the covers, you can start to look at some of the top deals, and to my very earlier point, the characterization and the counting of what is fintech does in these instances collect a lot of massive companies. So top of the list is Allpay China, 4.5 billion. If you were talking about fintech startups, clearly that's off the scale, but it is part of the fintech community. In the UK, Starling Bank was the biggest deal, down towards the bottom there, $101 million. So there's some pretty well-known names there, but there's also an awful lot that sort of represent what you might call is the already mature side of the industry rather than the startup world. But most of these companies are pretty new. They're only a few years old in many instances. The active investors are really there for you just to see. So 500 startups, pretty active. Techstars, I have quite a lot to do with the Barclays Techstars program, which runs every year quite successfully. So they're a big investor in their own right. And there's others there you would recognize, so Startup Bootcamp and some of these other guys which are based in the UK. So really, let's focus on the UK a little bit. As I say, I don't want to make this UK only. These trends, probably you would see them mostly mirrored globally, I would suggest, but there are different nuances in different countries. But the deal sizes in the UK, the trend in the UK for deal value is definitely coming off a little bit. So the height was 2015. We're just seeing deal volumes sort of okay, hanging on in there, but there are some other VC surveys that have recently come out which are exhibiting these same trends even 6 months after this data was provided. Quarterly fintech investment, interestingly, in 2016, really was not impacted by Brexit. So you would have thought that a lot of this stuff might have stalled quite badly post sort of July, August last year, when everybody was sort of really trying to assess what the impact might be, which is really sort of I'm not sure there's any story in that. It just so happens that a lot of deals were closed actually post-Brexit. In the analysis by vertical, you can see that alternative lending continues to be pretty high on the agenda. And even with all the hype down the bottom, RegTech is still a pretty small category, even given the huge focus going on in RegTech. Now, I'm not sure this is indicative of where we might be going. This is clearly looking in the rearview mirror, not in the future state necessarily. But there's some obvious things there that start to mirror the characterization from the UK TI report with EY. So payments has had a massive amount of volume investing over the past 2 or 3 years. Challenger banks, obviously, that's something very pertinent to the UK, which is attracting quite a lot of revenue. A lot of investment. Sort of investment rankings in the UK, just the mirror of the earlier slide I put up there in terms of the companies that are attracting investment. Starling Bank is the top. There's some pretty well-known names there I think you're all fairly familiar with. That number for Tandem's probably gone down a little bit recently. And you've got others sort of coming up at the bottom there, people like Open Gamma, really sort of quite specialized in their own field. So we're starting to see a broadening of interest. Again, top of the list in terms of innovation, you can see some of the guys there. You tend to think a lot of people are doing so many deals you can't keep up with it, but actually most companies, most investors are doing sort of a handful of deals. And so again, I just warn you on the mega amount of hype and looking at the absolute numbers as a representation of what really is actually going on. Just to sort of look at the post-Brexit thing for a second, significant amount of money actually travelled into the market post-Brexit. I had a number of conversations very early after the Brexit vote. A lot of people thought we were all about to turn the lights off in the City of London and the world was going to go somewhere else. Well, you know, that may well be true, but there's a lot of heritage and history here which sort of tells you it's quite sticky. It does mean you've got to pay attention to some other things going on and actually the market categorization of some of these investments, but there's some serious amount of investment going on into some very good companies there back towards the back end of last year. If you look at HQ locations and the inward investment, so you know, 45% of investment in the UK comes from non-domiciled VCs. I think that's just the nature of the VC industry, probably. We all know there's a significant amount more money goes into this industry in Silicon Valley and has done for a number of years. But it's still indicative that a lot of this is inward investment, which is why UK government, UKTI are all very interested in this. Location still pretty much UK. You could argue that Dublin, Berlin, wherever may well sort of pick up some of the movement as we go through the next year or two through negotiations. Inevitably, we don't know too much about equivalence or certainty or passporting rights or what have you, but this is sort of a picture as is now for fintech, and it's still quite healthy, in fact, for the UK. Looking at what goes through a lot of the accelerators, so clearly the whole fintech industry is collectively supported by accelerators. Some of those are obviously within institutions, but I'm talking here about sort of Startup Bootcamp, Accenture's FinTech Labs, Barclays Techstars, these sort of guys. So again, very consistent with the UKTI paper back in 2014, lots of payments, lots of big data, lots of everything around what people thought was going to be the emerging trend. 2015 sort of switched a little bit more into digital currency and blockchain. Interestingly, in 2016, RegTech is probably the highest sort of representation of the cohorts in these accelerators. I think you'll find that RegTech in those circumstances collects a lot of people who are looking at infrastructure and cyber. So this is operational risk, operations risk, technology risk, rather than pure regulatory compliance. So the buckets may be a little bit bigger under that characterization than it was 2 or 3 years ago. And then, of course, digital currencies and blockchain is sort of static for the time being. I would suggest actually that's very much should be called distributed ledger nowadays, because I think it's distinctly different from blockchain and cryptocurrencies, but that's another religious argument we can have over coffee. So the equity crowdfunding investment is quite important. No surprises, I suppose, that crowdfunding actually supports crowdfunding platforms. A bit of an obvious statement there, but there's still quite a healthy amount of money going into crowdfunding. So the perspectives are changing, in my view, to an industry that's super fast-paced, super hyped, super important to everybody. But if you take the synopsis that the true fintech startups are a small percentage of the market, you're still left, unfortunately, with a problem from UK Treasury and actually the Bank of England and others, in so much as, so who's going to replace the tax that is generated by this industry? And of course, there is a certain truism here, is that whilst we'd like to compete away the too big to fail problem, and we'd like to get away from a bit of an oligopoly market in retail banking in the UK, the fact is that big banks aren't dead, nor is it true that fintech's going to take over the planet. So there's something in the middle, and that something in the middle is starting to evolve, which I'll talk about in a second on the industry sandbox. It's evolving from disintermediation and competition to collaboration. And it may be going somewhere else, actually, because the whole sort of headlight here is Morgan Stanley put out a research paper from their equity division last week, which I haven't read the whole thing, but the headline was all about banks retaining control of that innovation agenda. So I think we've traveled this path where fintechs were seen as disruptive. To be frank, a lot of big organizations were quite defensive. A lot of trade organizations have been very defensive about the uptake and the ability for innovation to really improve the industry. We've gone through into a collaboration because people have understood, actually, like every solution, fintechs are doing a specialized focus improvement in a very specific area. It's very often not end-to-end supply chain. And as a consequence, collaboration works much better. But you're also now seeing, if you believe the VC trends and you believe what I'm about to tell you on the maturity of the industry, then the maturity of the industry dictates a more business as usual behavior by the large organizations. Personally, I don't think that's very healthy. I can understand why it's happening. And we can talk a little bit more about that as we go through this sandbox thing. But just to sort of give you another sort of data point, Startup Bootcamp recently and PwC produced this paper. It's only 2 or 3 months old. And I've just taken that one sentence, which I think is very true, which is, how can a maturing industry collaborate now to create value for consumers and society? And that also means the economy, obviously. So this also is quite supportive of a slightly different approach. So the World Economic Forum's recently recategorized their own approach to fintech and their fintech categories. And, you know, what I particularly like, if I'm on the maturity argument, is the fact we're talking about cloud solutions and improved processes. We're talking about new market platforms. We're talking about smarter, faster machines. So the thing that's unsaid in fintech, in my view, is most of this is enabled by real maturity in enterprise compute capability. So if I'm a startup today with a credit card, I can get on Amazon or IBM or somebody's cloud. I can get all the tools. I can start very, very quickly. Most of the capabilities that are coming through, a lot of these new platform capabilities, software as a service, is actually enabled by true maturity in enterprise computing. And so one shouldn't underestimate what actually is going on in true virtualization, in true distributed computing over encrypted data is the holy grail, right? So these are the sort of things that are maturing rapidly that allow us to do some very different things. And this is where, in my view, distributed ledger will start to collide, because there's plenty of other things going on that I can already do with plenty of other tools. And therefore, the open question there is it an enterprise-ready technology? And does it fit into this very mature scale universe that we already have out there? You can see the similar sort of trends in the applications for Startup Bootcamp, which is their own accelerator, obviously. It's a bit self-fulfilling because they will choose their own cohorts, as it were, so it's not a purist sort of argument. But you can see, again, quite a lot of 2016 investment in sort of what you might call technology solutions rather than, sort of customer apps for checking the fact you spent £2.50 in Starbucks 5 minutes ago and you want to double check that again every 5 minutes of the day. So there's some really interesting stuff going on. What I'd like to do is sort of segue into a consultation that we've just spent a year doing. Innovate Finance had the lead. This is all around the concept of an industry sandbox, which carries a number of sort of connotations. Sandbox is easily understood by technologists. It's not really the right word for this in my view, but that's the sort of the way it travels. As I mentioned earlier, the Blackett Review sort of established credibility and creation and momentum and funding to some degree for the FCA to take responsibility for Project Innovate and the RegTech Sandbox. Part of the Blackett Review, one of the recommendations was that industry, academia, technology firms, and anybody who was interested should come together to look at big issues. Now, I've got a personal sort of journey in that. I spent a lot of time when I was at IBM working and talking about systemic risk, spent a lot of time, an unhealthy amount of time, in what became the Office of Financial Research. So the concept behind the creation of the Office of Financial Research, which sits in US Treasury. The point was that very specifically in the US and very clearly here, there is no single entity that does independent research on the financial system. So in America, you have a National Institute of Science, National Institute of pharmaceuticals, everything you can name. No such thing as a National Institute of Finance. So conceptually, what might happen if you're able to pull together this ecosystem of people to concentrate on some large solvable issues, but unsolvable if people take them on one at a time. Other industries do this. Other industries have been doing this for a long, long time. I ran a team in IBM Research. My colleagues who ran industry teams were very successful in having 10, 15 participants in their industry come together and participate in joined up research in financial services. That was a complete no-go area because most people thought what they were doing was for their own purposes. We've seen quite a lot of analysis. There's probably nobody in the room who's involved in technology and or financial data that hasn't had a stab at a reference data utility or a KYC utility or some other utility. And we're still going round and round in circles in the financial services industry. We're beginning to think that open banking and API is a tipping point, which it is, but APIs aren't brand new. Government's been releasing data for years. We're struggling a little bit to gain the momentum in financial services. Lots of different connotations. I accept that. Lots of regulation to go through, but there's room for improvement. So the industry sandbox consultation was essentially something that came up as, well, should we do this and who's going to do it and what might it look like? Again, this whole report is on industrysandbox.org, or you can get it via the Innovate Finance website. We did a very short webcast on it last week or the week before. So quite interesting. Essentially what we tried to analyse over the course of a year through sort of multiple workshops, really supported by design thinking, which is very modern, but that's the way these things get done. So lots of input from lots of different parts of the industry. So this has not been done that much specifically just for Innovate Finance's membership. It's been done for the broader audience. The steering co carried a lot of people, FCA, UK Treasury, a whole bunch of sort of roundabout industry associations. And we looked at sort of, you know, what might a sandbox be? And it's quite simple to write down, quite hard to then think about how you might build one and who might run it and what you might want to do in there. But essentially, there's a distinction between off-market and on-market. The fintech's first question, you know, we've spent a lot of time in the UK talking to and with fintechs who, to be frank, some of them just think they need some new standards to make it very easy for themselves to get in. We know there is a lot of procurement issues, so even in innovation teams within big banks, very tricky to get behind the firewall, very tricky to get contracted, very tricky to actually make any meaningful difference rather than a proof of concept. And so, you know, what might an accelerator, incubator, sandbox look like? So the intent here is not to create another incubator. It's not an accelerator that you would see from Startup Bootcamp or Techstars. This is something quite different. So collaboratory might be a better word than a sandbox, but that's essentially looking at what we do. Regulatory sandboxes have a different meaning, in fact, because they're looking more at, really in the FCA world, that's much more to do with consumer protection. And so the big hidden question in all of these things actually is, who's got the data, who wants to look at the data, who's going to provide the data, how do you test on live data as opposed to you know, some dummy data that doesn't really mean anything, how safe is that? And then you're into sort of a big governance and structural sort of conversation. We looked at sort of three areas to potentially drive the need for this across the industry. First one would be quite an obvious one, which we've all travelled down the path over the years. This is it helpful for tech firms and the industry to come together to really trial rapid adoption of some solutions? That's really positive for technology companies, I think. That's quite positive for the industry to come together and take some shortcuts and not go down a blind alley on some of these emerging regulations and what have you that are really complicated, but underneath do have some pretty straightforward things that need to get done. So that ability to look at open stack, open integration, interoperability, all the sort of things that make innovation work across an industry could come together. The regulatory efficiency is really to encourage the regulators to be in this conversation. The intent here is not for the regulator to fund this or run this, but naturally people want to know that the regulator is somewhere in the conversation. Personally, I think that's very healthy for the regulator themselves. So this is not just about the regulator approving firms, fintechs, regtechs. This is about what we would like the regulator to be doing for themselves and analysing and using market-leading technologies, and then actually having a much more robust position to, should we say, stimulate away some of the defensiveness when banks come along and say, well, we couldn't possibly do that. And largely the answer to that is that's the wrong answer, right? So getting the regulator and the whole community upscaled on the use of these bleeding edge technologies. Complicated, but necessary. And then the complex issue, complex problem solving issue is really something we need to do a better stab at, right? Because in reality, most regulation that's come through from '08 has focused on collecting more data. Most of this is incoherent to the outside world. It's meaningful to a lot of regulators, but they don't really have the tools to do something with it. We're still faced with an industry that's sort of scaled up on, in theory, it's scaled up on extra equity and capital, lots of different ratios covering everything. But like most ratios, everybody's now pointing the same direction. Models don't work. The market's still as complex as it ever was before. It has lots of interconnecting points that aren't even regulated. And there are plenty of complex problems that everybody's trying to solve individually, which ain't going to make any difference to anybody. So these complex issues, in theory, are funded down to the Turing Institute, a lot of academic institutions looking at this sort of stuff. Some really interesting new technologies, which we'll probably talk about on the panel in a second, around where some of this is going. But very positive to be able to sort of at least put this on an agenda and contemplate this in an industry, collective industry capability. So design principles really around these three areas. So really have to be open. No point having a secret squirrel sort of meeting every quarter. These things have got to be open and useful. Connected and accessible, so open to everyone. Regulators, as I've said, need to engage and share, direct, get informed as well as informing. I think that's important. And then, you know, participants can be everybody who wants to come along. Different sort of models in terms of how the governance would work, different models in terms of how it gets funded. There are some interesting examples globally. Toronto's up and running with some good stuff. The Bill and Melinda Gates Foundation do some very good stuff. MIT does some good stuff. There's some good examples all over the place. Increasingly, MAS in Singapore are doing some aggressive campaigning around some of these issues. So it's becoming actually quite a popular topic. The design components really that we sort of came to through all this assessment, really you keep going around this loop, right? So effectively you need data, you need permissions, you need sort of artifacts, reference architectures, if you will, some sort of platform that people would donate or enable to be used in this organization. We talked a lot about certification, and whilst we didn't want to get into a formal certification piece, there is a lot to be said for a sort of semi-mature fintech who wants to rapidly evolve through something like this sandbox to prove to an educated VC or private equity investor that they're actually adhering to whatever best standards might mean. So in other words, they're writing to all the ISO stuff. They're basically already at a level that that nobody's worried that they're going to be some sort of proprietary new thing that's got no legs, you know, post early momentum. Then you're into sort of the whole advisory and keep going around this virtual circle. Just to give you a clue of how this all went, you know, it was a very, very interesting process. Innovation Arts were the guys who came along and ran this for us. Very modern, very much design related, so lots of sketches going on as you're in workshops. number of iterations, but very powerful in terms of collaboration and how you end up really over here. So I'd sort of recommend, if you're interested, sort of take down the reports. It's very readable. There are lots of use cases in the reports around what open innovation means, around some of the use cases right across different industry dimensions, all the way through from retail banking, open API, cyber, identity security, prudential type stuff. So this is really snapshot. So, you know, the big question is, so what, right? All this is going on, so what? Does anybody really care? Is it going to make any difference to the industry? Is it just noise that we're all traveling down? Does it mean people like me come to work in jeans instead of a suit? You know, does that make a difference? The point is that we are at an inflection point for a number of reasons. And this has been going on for a while, but I do think it's important to recognize it. It's for two reasons. One is the industry is at a complete inflection point because of business model change down to regulatory impact post 2008. Everybody knows it, but it's taken a long time for people to actually get that that's a strategic change rather than a responsive change. So we're in a world of people looking at serial compliance, not really getting their head around what the future really looks like. We have a lot of cultural issues. We have boardrooms that frankly don't understand technology, and we've got a lot of technology that bounces off the side. So there's something still to be done here around business model, organizations, processes and systems, money in middle and back office, and productivity in financial services is frankly still a joke in the industry. So you can look at any research, the cost of any trade is predominantly the same as it was years and years ago. It is not beyond the wit of man that we could do better. So I think that's where the money's going to be, and that's really why people get quite excited about RPA and distributed ledger and all sorts of stuff, but it's there to be done. So technology, what's the breakthrough technology? It isn't distributed ledger on its own. It is actually a combination. As I said earlier, it's the real maturity of distributed computing over encrypted data. That is what we're doing, and that's a difference to what we have been doing. There are lots of political and regulatory barriers. And Tony's paper, particularly on securities industry, that they wrote with Hogan's Level for Innovate Finance is excellent in terms of pointing out why we're not just going to move to real-time securities settlement tomorrow morning. So, you know, watch this space. There's a lot of work to be done. And there are sort of plenty of macro implications because, in my view, there are lots of blurring between both internal industry boundaries and external industry boundaries. So e-commerce, we already know, crosses over a whole bunch of areas that potentially takes away services from banks. Alibaba's probably the second largest provider of banking product on the planet. They're not a bank, they're not regulated. They built the core banking system in a year. It's no big deal, right? For all you big banks still trying to do one. It's can be done and will be done. So those boundaries are moving around. So my question to the regulator is, it's all well and good, but unless you've got coherent technology regulation, what do you think you're going to regulate in 5 years' time? Most of the new startups are marketplaces. BBVA is going to be a marketplace. Starling Bank is a marketplace. So it's all well and good having classic SIST-based, handbook-based regulation for cloud services outsourcing and all sorts of stuff. But unless you've got a coherent view of how you're going to regulate what is essentially a technology industry, we're going to sort of trip over ourselves. And then that brings, so what innovation components are vital to that journey? And as I said earlier, it doesn't mean that fintech solves the world. It doesn't have to. It solves a very peculiar problem. But the implications of how that gets baked into the industry infrastructure is actually the biggest challenge and an open question. And so I think I'm definitely out of time. I thank you all for listening and look forward to the panel in a moment.